Hey guys, this is StockSniperMike, and I'm back again with the 2-minute drill, here to give you guys 2 minutes of one crazy week of trading. And what a week it has been! Last week was bananas. We had two huge stocks that I'm sure all of you guys have heard about. Gamestop and AMC that have gone to the moon. But now we are coming back to reality. And a lot of people are asking themselves why this happened. So I'm here to simplify it and explain to you exactly what was going on here. Both the stocks are very similar stocks. GameStop we'll start with because that one ran the most and was the center of attention. It all started when somebody on the internet decided to look up, which is public information, what stocks are shorted, which means which stocks are bet against the most. And when you're betting against a stock, I want you guys to think about this. You have to bet against somebody. So who are you going to bet against? The bank. So what goes on in that situation when you're shorting a stock is the bank is going to decide, we will take the shares at this time to bet against you because you think the stock's going to go down, but we actually believe it's going to go up. So you are going to be betting against the bank in a short, and that's what's going on here. Now it's normal in the stock market for things to be shorted. That's a complete normal thing, but here there was nothing normal about it. Because when people did their research, they saw that GameStop was the highest shorted stock on the stock market, which is public information. Now the research on the most shorted stocks was very important here, but a key thing to notice is how these specific stocks were structured. Every single stock has inventory, which means the shares that you can go out and buy, just like anything else in life. PlayStation only has a number of PlayStations they can sell. iPhones only have a number of iPhones they can sell. The stock market's the same way. Unlike Apple and big stocks like Boeing, GameStop does not have as many shares out there available for people like me and you to buy. Actually, the exact number that they have out there to buy is 51 million shares. So there's a total of 51 million shares out there in GameStop. Now let's put this into perspective. If more than 50% of those shares are being shorted, that means at least 25 million is being shorted. So the other half is available, and those are the only shares that people like me and you could buy and sell. So now let's just think there's only 25 million shares out there and available. So what happens when people are interested in those shares and they want to buy them? It gets hot, like anything else in life. When there's not as much inventory and when there's a huge amount of demand for it, you want to raise the price up. And that's exactly how the stock market works. What's going on in GameStop was there weren't a lot of shares out there at the price when it was at $7 or $8. When the first original people started to buy it at $8, the stocks went up like it should. But then when the internet really caught steam and we had a huge flux of people, Reddit has millions of people out there. So when the Reddit people started to flux in and really start to see what was going on here, they are actually more educated than a lot of you guys think out there, because they saw the amount of shares that were available for people like me and you, and they said, hey, if we buy all these shares up, there's no way the stock could go down. The stock can only go in one direction, and that is up. So what happens when you start to buy something with less supply out there? The price is going to go up. So GameStop Reddit people flocked in and they started buying. And when you buy something at $8 and it becomes hot, you want to sell it at $16. And then that guy that buys it at $16, there's only a certain amount of shares out there. So remember that. Someone else is going to want those shares at that time. So now he has it at 16, he could sell it wherever he wants. And that's what this lateral effect happened. And that's how the stock market works. And then to put the icing on the top, I know I'm going a little bit into detail, but I really want to try to keep this as simple as possible. When you're betting against the stock, when a stock goes from 2 to 4, you lost 100%. But when the stock goes from 4 to 6, you lost another 100%. And when the stock goes from 6 to 8, you lost another 100%. So when you sign up for shorting, you have to have extra money in your account. It's guaranteed. Every broker makes you do it. If you're gonna short, you're taking the risk on that it can go to the moon and you can get squeezed. And that's what happened here. We had huge hedge funds betting against GameStop, saying it's gonna go down. Then you had the Reddit people betting on the limited amount of shares that were out there for GameStop, and that made the stock shoot up. And as the stock was shooting up, the last thing to top this all off was a short squeeze. And as the stock's shooting up, think about this. If you are now shorting against the stock and you had $1,000 in at $2, you're now down $1,000 when it's at $4. When you go to $6, you're down $2,000. When it goes to $8, you're down $3,000. And it cannot stop, as what happened to GameStop. And when it does not stop, the bank's eventually gonna have to sell your shares when you don't have money in your account. When your account hits zilch, they're gonna sell your shares, and that's what happened here. We had the Reddit people beating the normal hedge fund people, and GameStop went to $300. So it was amazing to see. We saw the stock go from $65 all the way up to $483 in only 6 days. So 6 days, the stock was able to go about 600%. And that made a lot of people that aren't into investing at all interested in what's going on. A lot of people that don't invest actually jumped into GameStop to be a part of something like this. But I want to tell you guys something right now. That's what we're here for. That's what the Sniper crew is here for. The GameStop thing is going to happen once every 3 years. But what happens in the StockSniper's and with the StockSniper's, you see 600% movers almost every single day. And I can't make this up. To give you guys a quick example, something going on this week, as GameStop was blowing up, we have a stock, INKW, an OTC sub-penny stock, went from 0.002 to 0.069. In 8 days, the same amount as GameStop, this stock went up a total of 3,450%. 6 times more than what GameStop went up. And that's not it. There are plenty other stocks that are doing this. Another great example is ABML, a battery company that got electric fire in the OTC market and went from $1 to $4.90 in 4 days. That's 490%, exactly what GameStop did. Also, we have ALP, another great example, ALPP, and that stock went from $1 to $4.70 in 6 days, 470% in 6 days, doing exactly what GameStop did. And I can keep going down the list, and that's the best thing about what we do. We are finding movers like this every single day and not once a year. So if you'd like to be a part of the team, we would love to have you guys. Please check us out at www.thestocksnipers.com. And if you're not part of this YouTube channel, hit that subscribe button below. We got great content coming out daily, weekly, and be ready. We have our biggest announcement yet that's about to come out at the end of this month. So be on the lookout for that. And if you don't follow us on social media, make sure to go check us out. We got great content that comes out every single day. And last but not least, Profitly, Profit.ly, a website that tracks every single one of our trades. If you don't believe what we do, go on that website. You can see over 1,900 or over 1,800 trades on Profit.ly under the StockSniper's. Alright guys, another great week in the books. This one was a little more confusing and a little more in detail, but I'll be here every week with another 2-minute drill. StockSniper Mike, out.